If I had to start trading again from zero, I know exactly what I would do differently. Back then, I thought trading was a fast ticket to wealth, a shortcut to freedom, a way to escape the 9 to 5 and become my own boss overnight. But that mindset is what destroyed me. It's what destroyed my first account, my second account, and almost my confidence completely. Because here's the truth. Trading doesn't punish you because you don't know the right indicator. It punishes you because you have the wrong expectations. If I started again, I wouldn't be chasing riches. I'd be chasing survival, discipline, and clarity. And I want you to imagine that you're starting fresh right now. No baggage, no blown accounts, just you, a chart, and a decision. Will you repeat the same mistakes every trader makes? Or will you learn from someone who's already taken the hits for you? If this already feels valuable, do me a quick favor, follow the channel and share it with someone who's learning trading too. The more we grow this community, the more content we can create to help traders avoid the mistakes I've already made. I really appreciate your support. It keeps this going. When I started out, I thought the key to success was knowledge. I consumed everything: books, courses, videos, forums. I thought if I had enough strategies, enough signals, enough indicators blinking on my screen, I'd find the magic key that unlocked profits. But instead, my charts looked like a Christmas tree. Indicators contradicted each other. One told me to buy, another told me to sell. I wasn't trading, I was gambling with a disguise. I confused activity with productivity. Every time I saw a candle move, I felt like I had to do something. And that's where most beginners fail. They believe trading is about predicting, when in reality, it's about managing risk. If I started again, I'd erase every unnecessary line, every indicator, and I'd focus on simplicity. Because trading is already hard enough, why make it harder by drowning yourself in noise? Think about the psychology behind your first trades. You win one, you feel unstoppable. You lose one, you feel like you've been punched in the gut. And the worst part? Those emotions control your decisions. That's why I used to revenge trade. I'd lose money, then immediately jump back into the market with bigger size, thinking I'd win it back. Sometimes I did, but more often, I lost even more. It's like trying to put out a fire by throwing gasoline on it. If I started again, I'd understand that the market doesn't care about my feelings. It doesn't owe me a win just because I had a loss. Each trade is independent. Each trade has to be approached with fresh eyes. And most importantly, risk has to be managed before profit is even considered. Now, let's talk about money. Every beginner thinks they're going to flip a small account into something huge in a few months. I used to believe that too. I'd deposit $500, risk half of it on a single trade. And when I lost, I told myself I just needed a bigger account. But that's like saying you need a bigger bucket when your bucket has holes in it. The size of your account doesn't matter if you don't know how to protect it. If I started again, I'd begin with small risk, no more than 1 to 2% of my account per trade. Why? Because trading is not about how much you can make in a day. It's about how long you can stay in the game. The trader who survives has a chance to grow. The trader who blows up is finished before they ever improve. Here's what else I would do differently. I'd focus on one single setup. One, not 5, not 10, not every pattern that looks promising. Just one that I can master until it feels second nature. In the beginning, I chased breakouts, reversals, scalps, swing trades, you name it, I tried it. But every strategy requires a different mindset, different risk tolerance, different rules. I was stretching myself too thin, trying to become a master of everything and ending up a master of nothing. If I started again, I'd choose one setup that fits my personality. Maybe it's breakouts. Maybe it's trend following. Maybe it's mean reversion. Whatever it is, I'd study it obsessively. I'd watch hundreds of charts, thousands of examples, and I'd commit to trading only that one pattern until I could execute it with confidence. Consistency comes from repetition, not randomness. Another thing I'd do differently is journaling. Back then, I thought journaling was a waste of time. Why write down a trade when I could just look at the chart? But here's the thing. The chart shows you what the market did, not what you did. It doesn't record your emotions, your impulsive decisions, your reasons for entering. When I lost trades, I used to blame the market. But when I finally forced myself to journal, I saw the truth. Most of my losses came from breaking my own rules. I was overtrading. I was entering too early, exiting too late, or ignoring my stop loss. Journaling is like holding up a mirror. It shows you the trader you really are, not the trader you pretend to be. If I started again, I'd document every single trade, entry, exit, risk, result, and most importantly, how I felt. Because emotions drive behavior, and behavior determines success. Speaking of stop losses, let's talk about risk management. If I started over, I'd make risk my top priority. Not profits, not winning streaks, but risk. I'd place a stop loss on every trade before I even think about where the profit target island. Why? Because you cannot control how much the market gives you. You can only control how much it takes from you. Most beginners set unrealistic profit goals and ignore risk. They dream about doubling their account in a month, but they don't think about what happens if they lose half of it in a single day. The market will test your discipline. It will tempt you to move your stop loss, to add to a losing position, to risk more because this trade looks perfect. But every time you break your rules, you're digging your own grave. If I started again, I'd accept small losses like a professional. Because small losses are tuition fees. They teach you. Big losses destroy you. Now, let's imagine you follow these principles. You start small, you master one setup, you journal every trade, and you respect your stop loss. What happens next? You grow. Slowly, maybe, but steadily. And that's the point. I used to think slow growth was boring, but boring is beautiful in trading. Boring means you're following rules. Boring means your account isn't swinging wildly every day. Boring means you're consistent, and consistency is the only path to scaling up. If I started again, I wouldn't rush to trade bigger. I'd wait until I had months of consistent results. Only then would I slowly increase my position size. Because trading isn't about getting rich quick. It's about getting rich eventually without losing your mind in the process. And here's the last thing I'd remember if I started again. The market is always bigger than me. Always. No matter how much I study, no matter how many years I trade, the market can always do something unexpected. That's why humility is essential. Overconfidence kills traders faster than ignorance. The moment you think you've mastered the market, it humbles you. If I started over, I'd approach every day with humility. I'd remind myself that survival is victory, discipline is wealth, and patience is the real edge. So if you're starting fresh right now, or if you're on your second or third attempt, understand this. The biggest difference between traders who make it and traders who don't isn't strategy, it's mindset. Most people quit after losing because they believe trading isn't for them. But it's not that trading doesn't work, it's that their approach doesn't work. And if I could go back in time, I'd save myself years of pain by adopting these principles sooner. Start small. Focus on one thing. Journal your journey. Manage your risk. Grow slowly. Respect the market. If you can do these things, you won't just survive, you'll thrive. When I look back at my early trading journey, the biggest shock wasn't the losses, it was how unprepared I was for the emotional roller coaster. People think trading is about math, about charts, about finding the perfect system. But trading is actually about psychology. The charts don't lie, the market doesn't lie, but our minds do. We lie to ourselves all the time. We tell ourselves we'll stick to our plan. We tell ourselves we'll close the trade at our stop loss. We tell ourselves we'll wait for the perfect setup. But the moment money is on the line, our brains change. Fear and greed kick in, and suddenly the rules don't matter. If I had to start trading again, I wouldn't spend all my time learning indicators, I'd spend my time learning myself. Because once you master your own psychology, everything else becomes easier. Let me paint you a picture. You enter a trade. At first, it's green. You feel good. You start dreaming about how much profit you'll make if the trend continues. But then the candle wicks back. Suddenly, your profit shrinks. Fear creeps in. You think, maybe I should close now and secure what I've got. You exit, take a tiny gain, and then watch in horror as the price shoots up exactly where you thought it would go. Now you feel regret. You feel anger. You think, next time I'll hold no matter what. So the next trade comes along. This time it goes against you. You hold, you hold, you hold, refusing to cut the loss because last time you sold too early, and then the loss grows bigger than you can handle. This cycle, fear, greed, regret, anger, is the real battlefield of trading. If I started again, I'd focus on mastering these emotions first. Here's how I would do it. First, I'd accept that losses are part of the game. Every beginner hears this, but few internalize it. Losing is not failure. Losing is tuition. It's the cost of doing business. If you treat every loss as proof that you're bad at trading, you'll never last. If you treat every loss as data, as feedback, you'll grow. If I started again, I'd reframe every losing trade as a lesson I paid for. That way, I'd be grateful for it instead of bitter. Because bitterness clouds judgment, gratitude clears it. Second, I'd separate my self-worth from my account balance. This is a mistake almost every trader makes. You feel good when you're up, you feel worthless when you're down. But money is not identity. Your value as a person doesn't fluctuate with the market. If I started again, I'd remind myself daily, wins and losses are temporary, but discipline is permanent. The goal isn't to feel good when I win and bad when I lose. The goal is to feel calm no matter what happens. That calmness is what leads to consistent decisions. Third, I'd control my environment. Trading isn't just about charts. It's about where you trade, when you trade, and what state you're in when you trade. Back then, I used to trade late at night, exhausted, scrolling through random charts while half asleep. Of course, I made mistakes. Now, I know better. If I started again, I'd create a ritual. I'd wake up, review the markets at the same time each day, journal my thoughts, and only then look for setups. I'd eliminate distractions. No phone buzzing with social media. No background noise pulling my attention away. I'd treat trading like surgery, focused, precise, deliberate. Because one impulsive mistake can undo weeks of progress. And here's something I wish I had learned earlier. Overtrading comes from boredom, not opportunity. When you sit at your screen too long, your brain invents reasons to trade. You start seeing patterns that aren't really there. You convince yourself that this time will be different. But trading isn't about constant action, it's about patience. If I started again, I'd give myself permission to do nothing. I'd understand that waiting is part of the job. Some days, the best trade is no trade. And the discipline to sit on your hands is just as valuable as the courage to click, buy, or sell. Now let's talk about greed. Greed is sneaky because it disguises itself as ambition. You think you're just pushing for bigger goals, but really, you're sabotaging yourself. I remember times when I'd be up nicely on the week. I should have been done. But greed whispered, "Why stop now? One more trade. Double it. Triple it." And those one more trades are the ones that erase days of progress. If I started again, I'd learn to walk away when I'm ahead, because in trading, stopping at the right time is a skill. You don't need to squeeze every drop out of the market. You just need to protect what you've already earned. There's no shame in leaving money on the table. There is shame in giving it all back. Fear, on the other hand, is the twin of greed. Fear tells you not to take trades you should take. Fear tells you to close too early. Fear tells you to freeze when action is required. And here's the paradox. Fear gets stronger the more you risk. When you trade with money, you can't afford to lose. Fear dominates. That's why I'd start small if I started again. Small size keeps fear manageable. When the money isn't life-changing, your brain stays calm. And calm decisions are better decisions. As your confidence grows, as your edge proves itself, only then should size increase. Most beginners do the opposite. They go big too fast. Fear takes over, and they never recover. Starting small is not weakness, it's strength. Another thing I would do differently is practicing mindfulness. Sounds strange for trading, right? But mindfulness, awareness of your thoughts and emotions, changes everything. Back then, I would spiral. One bad trade led to frustration, frustration led to revenge trading, and revenge trading led to disaster. If I had taken a breath, paused, and noticed my emotions, I could have stopped the spiral. If I started again, I'd take short breaks during trading sessions. I'd step away from the screen, breathe, reset. I'd train myself to notice the signs of emotional trading. Sweaty palms, rapid heartbeat, impulsive clicking. When those signs appear, that's when you stop. That's when you protect yourself. Mindfulness is like a circuit breaker. It prevents emotional overload from blowing up your account. And let's be real, trading can be lonely. Most people around you won't understand what you're doing. They'll think you're gambling. They'll doubt you. Some will even laugh at your losses. That isolation makes the journey harder. If I started again, I'd build a support system. Maybe it's a trading community. Maybe it's an accountability partner. Maybe it's just one person who understands the process. Because when you're surrounded by doubters, it's easy to give up. But when you have someone who pushes you, who reminds you why you started, it's easier to stay consistent. Trading is individual, but it doesn't have to be isolating. Now, imagine you've mastered these psychological principles. You accept losses as lessons. You separate identity from account balance. You control your environment. You manage greed and fear. You practice mindfulness. You find support. What happens then? You become resilient. And resilience is the real edge in trading. Strategies will change. Markets will evolve. But resilience keeps you in the game no matter what. If I started again, my number one goal wouldn't be making money. It would be building resilience. Because once you have that, money follows naturally. But here's the kicker. You can't just think your way into discipline. You have to train it. Discipline is like a muscle. The more you use it, the stronger it gets. If I started again, I'd design small daily habits that reinforce discipline. Journaling every trade, setting daily loss limits, taking scheduled breaks, reviewing weekly performance. These habits may seem boring, but they compound into mastery. Just like compounding profits, compounding discipline is the secret to long-term success. And when you finally start to see consistency, when your equity curve begins to rise steadily, you'll realize something important. Trading isn't really about money. Money is the byproduct. Trading is about becoming the kind of person who can handle uncertainty with calm, who can face setbacks with patience, who can control emotions in high-stakes situations. If I started again, I'd embrace trading as personal growth, not just financial growth, because once you grow as a person, the profits take care of themselves. So if you're struggling right now, if your emotions feel out of control, if your losses feel too heavy, understand this. You're not broken. You're just human. Every great trader has felt what you feel. Every great trader has lost, panicked, and doubted themselves. The difference is they kept going, they learned from it, and they trained their minds. And you can too. If I had to start again, I wouldn't fear the struggle, I'd welcome it, because the struggle is what transforms you into the trader you want to be. If I had to start trading again, one of the biggest shifts I'd make would be in how I approach strategy itself. Back then, I believed the myth that there was some secret formula out there, some holy grail system that guaranteed wins if I just found it. I spent endless nights hopping from one strategy to another, chasing every YouTube video, every online course, every flashy promise of 90% win rate. I was a strategy collector, not a trader. And guess what? None of them worked. Not because the strategies were useless, but because I never gave myself time to master any of them. If I started again, I'd stop searching for perfection and start building consistency with simplicity. Because the truth is, trading doesn't reward the smartest or the flashiest. It rewards the most consistent. The first thing I'd do is strip away all the noise. No 20 indicators on the screen, no complex algorithm that I barely understand. Just price action, volume, and maybe one or two tools I fully trust. Why? Because simplicity gives you clarity. When you only track what matters, your mind is sharp. You can make decisions quickly, without hesitation. Most beginners clutter their charts because they think more data equals more accuracy. But in trading, more data usually equals more confusion. If I started again, I'd keep my charts so clean that anyone could glance at them and instantly see the story. Because trading is about stories where the market has been, where it might go, and how you position yourself in between. Next, I'd understand the importance of context. One of my biggest mistakes early on was treating every setup the same, no matter what the market conditions were. I didn't care if we were in a strong trend, in a choppy range, or reacting to major news. I just applied the same strategy blindly. And of course, it failed. If I started again, I'd study market conditions first. Is the market trending or ranging? Are we near key support or resistance levels? Are there economic events that could spike volatility? I'd learn to ask these questions before clicking buy or sell, because a strategy that works beautifully in one environment might completely fail in another. Context is king. Without it, even the best setup becomes a coin flip. Another thing I'd do is backtest properly. I didn't do this enough in the beginning. I'd see one or two setups work in real time and convince myself I'd found gold. Then I'd risk real money and watch it crumble. If I started again, I'd backtest for months before risking $1. I'd go through hundreds of charts, mark every occurrence of my setup, and record the results. Not just whether it won or lost, but the average risk to reward ratio, the drawdowns, the win rate, and how long trades typically lasted. Backtesting isn't glamorous, but it gives you confidence. When you've seen your setup work hundreds of times in history, you trust it in the present. And confidence is what allows you to follow rules instead of second-guessing yourself. After backtesting, I'd forward test with a demo account. This is something most beginners skip because they're impatient. They want to make money right away. But demo trading builds skill without risk. It shows you how your strategy performs in live conditions, real spreads, real slippage, real speed without the emotional pressure of money. If I started again, I'd spend weeks or months in demo, proving my consistency before touching real funds. And when I finally went live, I'd still keep the size tiny until I had months of data to prove myself. Because trading isn't about rushing, it's about building a track record that earns your confidence step by step. Now, let's talk about setups. If I started again, I'd pick one setup that matches my personality and schedule. If you hate waiting, scalping might suit you. If you're patient, swing trading could be better. There's no one-size-fits-all strategy. The best setup is the one you can execute without stress, over and over again. For me, that might be breakouts after consolidation. For someone else, it might be pullbacks in a trend. The exact setup doesn't matter as much as your ability to execute it consistently. And consistency comes from alignment. Your lifestyle, your emotions, and your strategy all need to fit together. Another crucial lesson, I'd stop expecting perfection. No setup wins 100% of the time. Losses are part of the equation. What matters is risk to reward. If you risk $1 to make $3, you can be wrong more than half the time and still make money. That's the beauty of trading. If I started again, I'd obsess less over being right and more over managing my risk to reward ratio. Because the market doesn't pay you for being right, it pays you for managing your risk. And here's something powerful I wish I had understood earlier. Execution beats analysis. I used to spend hours analyzing charts, drawing lines, debating with myself, and by the time I decided to act, the move was already gone. Paralysis by analysis cost me more than any losing trade ever did. If I started again, I'd focus on execution. Once my rules are met, I'd take the trade. No hesitation, no second guessing. Because in trading, hesitation is expensive. The market rewards decisive action backed by preparation. Speaking of rules, I'd write them down clearly, not in my head, not as a vague idea, written down, black and white, like a contract with myself. Entry rules, exit rules, risk per trade, maximum trades per day, and then I'd follow them religiously, because rules protect you from yourself. When emotions rise, rules keep you grounded. Without rules, trading becomes gambling. With rules, trading becomes a business. If I started again, I'd treat trading like a business from day one. Businesses have plans, budgets, risk controls. Traders need the same. Another adjustment I'd make is understanding probabilities. Every trade is just one event in a series. You can't judge a strategy by one outcome, just like you can't judge a coin toss by one flip. I used to get discouraged after 2 or 3 losses in a row. I thought my system was broken. I'd throw it away and look for something new. But I didn't understand probabilities. Even a strategy with a 60% win rate can have 5, 6, 7 losses in a row. That doesn't mean it doesn't work. It just means variance is part of the game. If I started again, I'd think in terms of series, not single trades. I'd focus on the big picture, the long run, the next 100 trades, not the next one. Let's not forget risk of ruin. This is something few beginners think about. Risk of ruin means how likely you are to blow up your account before your edge plays out. If you risk too much per trade, even a good system can kill you. Imagine you risk 20% per trade, 5 losses in a row, and you're done. But if you risk 1% per trade, you can survive 100 losses. Survival gives your edge time to work. If I started again, I'd calculate my risk of ruin and keep it near zero by risking small. Because the number one goal is to stay alive. Only then can you thrive. Now imagine combining all of this. You have a simple, clean strategy. You've backtested it. You've proven it in demo. You've defined clear rules. You risk small, you think in probabilities, you focus on execution. What happens then? Trading becomes boring. And that's a good thing, because boring means you're no longer reacting emotionally. You're following a process, and processes are repeatable. If I started again, I'd embrace the boredom. I'd understand that consistency isn't flashy, it's quiet, discipline, day after day. And here's the final piece: adaptation. Markets change. What works today might not work tomorrow. If I started again, I'd commit to constant learning. I wouldn't chase every new idea, but I'd stay aware, testing adjustments, refining my edge. Trading isn't about finding a system and sticking with it forever. It's about evolving with the market while keeping your discipline intact. The core principles, risk management, psychology, patience, never change. But the way you apply them must stay flexible. Adaptation is survival. So if I could go back and start over, I wouldn't waste years chasing the Holy Grail. I wouldn't overload my charts with noise. I wouldn't gamble on untested setups. I'd strip everything down to simplicity, master one strategy, backtest it thoroughly, prove it in demo, execute it with discipline, and adjust as needed. That's how trading becomes sustainable. That's how you turn chaos into clarity. That's how you stop being a strategy collector and finally become a trader. If I had to start trading again, the last and most important lesson I'd take with me is about time. Because trading isn't really about charts, or setups, or even psychology. It's about time. How long can you stay disciplined? How long can you resist the urge to gamble? How long can you stay patient before the market rewards you? Time is the ultimate filter. It separates those who quit after a few losses from those who build a career. And if I started again, I'd approach trading not as a sprint, but as a marathon. Because wealth in trading doesn't come from one lucky trade. It comes from hundreds of small, disciplined decisions compounded over years. When I started out, I was obsessed with shortcuts. I wanted the fastest strategy, the quickest profits, the overnight success. That obsession is what destroyed me. I never gave myself the chance to grow slowly. And slow growth is the only kind of growth that lasts. If I started again, I'd embrace the long game. I'd remind myself every day, I'm not here to win big today. I'm here to still be trading 10 years from now. That shift in perspective changes everything. Suddenly, you don't care about missing one trade because you know there will be thousands more. You don't care about one losing streak because you know your edge plays out over time. You stop living and dying by every candle and start thinking like an investor in your own discipline. Another truth about time is compounding. Everyone talks about compounding money, but few talk about compounding skill. Every time you follow your rules, you strengthen the habit. Every time you journal, you build awareness. Every time you review your trades, you sharpen your edge. These small actions compound into mastery. If I started again, I'd focus on compounding discipline just as much as compounding profits. Because without discipline, compounding money is impossible. And here's the beauty of compounding. It starts small. You might only make a few dollars a day in the beginning. It feels insignificant. But over weeks, months, years, those small, consistent gains add up. Imagine risking just 1% per trade, aiming for 2 to 1 or 3 to 1 risk to reward. Even with a modest win rate, your account grows steadily. Slowly, yes, but steadily. And with each step, your confidence grows too. That's when compounding accelerates not just in your balance, but in your belief in yourself. If I started again, I'd stop chasing big wins and start stacking small, consistent ones. Because that's how you win the long game. Now, let's talk about lifestyle. Trading isn't just something you do on the charts, it's something that bleeds into your entire life. The habits you build outside trading affect how you perform inside trading. If you're undisciplined in your health, your sleep, your routines, that same lack of discipline shows up when you trade. If I started again, I'd design my lifestyle around being a trader. That means good sleep, clear routines, scheduled breaks, time for exercise, time for reflection, because your body and mind are the tools of your trade. If they're not sharp, your decisions won't be either. Another thing I'd change is how I define success. Back then, success meant money. If my account grew, I was successful. If it shrank, I was a failure. But now I know that success in trading is measured differently. Success is following your rules. Success is cutting losses quickly. Success is walking away when your limit is hit. Success is being consistent, even when the market is chaotic. If I started again, I'd measure success by discipline, not dollars. Because dollars are a lagging indicator, discipline is the leading one. Focus on discipline, and the dollars follow naturally. And we can't ignore risk of burnout. Many traders fail not because they lack skill, but because they burn out mentally. They obsess over every tick, every candle, every move. They live and breathe charts 24/7, and eventually, they collapse. If I started again, I'd create balance. Trading would be part of my life, not my entire life. I'd set trading hours, and outside those hours, I'd live fully, family, hobbies, rest, joy. Because a burned out trader is a dangerous trader, and balance isn't weakness, it's sustainability. Before we wrap up, if you found even one idea here that gave you clarity, consider following and sharing this channel. It might help another trader out there the same way it helped you. Thanks for being here. You're the reason I keep making these videos. Here's another piece of wisdom I wish I had embraced earlier. Sometimes the best thing you can do is walk away. Not forever, but temporarily. The market will always be there tomorrow, next week, next month. If you're tired, if you're emotional, if you've hit your daily or weekly limit, walking away is strength, not weakness. If I started again, I'd build that into my system. Hard limits, non-negotiable rules for stepping aside when needed. Because the market rewards patience, and patience often looks like doing nothing. And let's talk about money management beyond the chart. One of the biggest mistakes I made early was thinking all my wealth would come from trading profits. But trading is income, not wealth by itself. Wealth comes from what you do with the profits. If I started again, I'd reinvest smartly. Some into growing my account, some into savings, some into assets outside the market. Because one stream of income is fragile. Diversification builds security. Trading is powerful, but it's not invincible. And true freedom comes from financial stability, not just trading wins. Now, imagine you've done all this. You think long-term. You compound discipline and profits. You design a balanced lifestyle. You redefine success. You manage wealth beyond just trading. What happens then? Trading stops being a desperate chase and becomes a calm process. You wake up, you follow your plan, you take your trades, you log your results, and you move on with your day. No drama, no obsession, no constant stress, just a steady rhythm. That's the dream. Not adrenaline, not excitement, calm consistency. If I started again, that's the dream I'd pursue. And here's the final truth. Control in trading begins when you stop caring about controlling the market. The market is bigger than you. You cannot control it. You cannot force it to give you profits. But you can control yourself. You can control your risk. You can control your patience. You can control your reactions. That's where power comes from. If I started again, I'd stop trying to predict and start focusing on control. Control of me, not the market. Because once you stop needing the market to behave a certain way, you finally have freedom. So, if today was my first day as a trader, this is what I'd tell myself. Slow down. Start small. Focus on survival. Master one setup. Journal relentlessly. Respect risk. Embrace patience. Build discipline daily. Define success by your process, not your profits. Protect your energy, your time, your balance. Grow steadily. Think in years, not days. Adapt, but never abandon discipline. Walk away when needed. And above all, remember this. Trading is not about money. Trading is about becoming the person who deserves money. The market rewards discipline, patience, humility, and resilience. If you build those qualities, the profits will follow. And maybe the biggest lesson of all, if I started again, I wouldn't be in a hurry, because nothing worth having comes overnight. Trading is a mirror. It reflects your strengths, your weaknesses, your fears, and your greed. It exposes who you really are, and if you let it, it can shape you into someone stronger, wiser, calmer, someone who doesn't just survive the market, but thrives in it. That's the journey. That's the reward. And if I had to start trading again, I'd be grateful for every step of it.